Welcome back to Fast Market. I'm Tom White, joined again by Kevin Hincks, and we've got Scott Bauer back. He's the CEO of Prosper Trading Academy. Welcome back, Scott. Markets are up, near highs for the session, but Scott made a note before he came in. Scott, what's going on with McDonald's?
You know, the conference call must be going on because, you know, we pull up that chart there and you can see.
There's the 1 minute trade.
There you go. It exploded this morning, stayed there for half hour, 45 minutes, whatever it was, and then bam. This is a great example of when you have a reason for doing something and you put a trade on for like this, for earnings. So it's not an investment, it's a trade. Yep. Bulls and bears prosper, pigs go to the slaughter. You take your profits because you don't know what's coming next.
Right, and it's nice, the chart that Kevin's got up there is showing reflective of that conference call that just started right when our show started. So obviously not saying too many positive statements, Kevin, but our short call vertical is doing better.
Yeah, look at that. We were down about $50 when the show started. Now we were just up $250. Now we're up $150. So I mean, it looks like McDonald's is coming back a little bit off its lows. No, down 9 cents.
Yeah.
No.
Yeah.
So we're short the 190 call. So we're looking a little better on that
pretty good there.
Yeah, we got 9 days to expiration on that, and plenty of room to the upside before we get to that break even. But we got earnings again, guys. We're going to talk about it. Tesla. Ben Watson joined us earlier for his technical take on this particular name, Scott. It's been in a range 250 to about 380 the last 2 years. I know that's a wide range, but really volatile throughout that period, but still in a range. Your thoughts on Tesla going into this report, on this name?
And that range has been an extremely tradable range.
Right.
Really has held. You know, I think you probably have to be bullish. I don't see them coming out with anything, you know, that really is going to hurt the stock. I think what we may actually see is some real positive news about China. And I say that because they have this new gigafactory that they're opening up there. They're going to start producing cars there, which is a really big deal because what they're able to avoid and what they're able to get around is all the tariffs now. So rather than exporting cars into China, now that they can build them there, they have that 20 or 25% tariff come right off the top, which they now put in. You know, they can lower the prices of their cars or add it in. I think that's going to be a big deal.
And don't discount the fact that he's going to come on this conference call and talk about how the changes they've made in the last 2 months are going to allow them to sell this car for a much lower price in the United States to much more people. I think that's how he's going. I think that's how he's going to skew this conference call.
Now, remember, the kickbacks as far as the tax break on this were cut in half at the end of the year. Model 3 production is starting to ramp up, but still not where it needs to be. And they cut prices on their Model S and Model X. See, to me, you guys are, given a bullish or bullish tint case. I'll give the bearish tint case, or the direct opposite of it. This stock's been hammered recently, cut 7% of their workforce. They're going to a standardized battery in their Model X and Model S cars moving forward, but China's down the road. That gigafactory is not supposed to open until the latter stages of the fall. And, this stock's been punished. But that being said, Scott,
so that every time out there,
exactly.
That news is already out there.
Exactly.
Maybe that was their pre-announcement.
So you want to trade today, looking forward on news that's already been announced.
But it has rebounded. It has rebounded from lows.
Yes, it has.
And we are short a put vertical in there. 280.85, I think that you guys did about a week and a half ago, Kevin. But what are you guys looking at here as far as strategies go? Stocks expected moves about $26 plus or minus post earnings. So what are we looking at here, guys? Because this thing, if you look at the one-year chart, the last couple earnings events has caused this stock to move pretty volatile.
Yeah. I personally would look at a bullish iron condor, much like I was talking about earlier, because I think there is going to be an upside move, but I want to take advantage of the extreme premium that's out there right now, so I'd want to skew it to the upside. Okay. Kevin, I saw that you had loaded in there kind of a stock replacement diagonal.
Not really a stock replacement so much because it's at the money, by long as it's at the money, but it's a diagonal, same idea, same spread.
So you're buying the deeper in the money call or the at the money call, 300, selling the 320s. That's a $1,300 trade right there for a one lot. That's your complete risk on that trade. But the premise is that it grinds higher up to 320, Kevin, and allows you to roll that short option, the 320 strike, over and over again to reduce risk, or just close it if the stock does go up above 310, maybe 315. That's your goal, right?
That's my goal for this trade. And like I said, it's a little pricey, but you've got a little time on the longer call, and you've got, look at the call, you know, the 320 that you're selling. If you don't get the move you're looking for, you got $6.60.
Yeah, that's
coming
a lot
off
of
the table there.
Quite a lot of premium, but look at the implied volatility on those strikes, Kevin, over 130%. Yep. So that's telling you right now.
Expect to move $29.
Yep, $30
for the week, $26 for one day.
Yep. So Kevin's going to go ahead and put that in at least one time, just so we can kind of take a look at that tomorrow.
We'll do two. We'll go up a little bit, but we'll keep that relatively small here.
All right. Did you want to look at an iron? See, I looked at a short iron condor.
Are you looking at this expiration?
This expiration.
All right,
completely on this.
Throw your strikes out at me.
All right, sell the 290, 285 put spread.
So that's really close. You're only about $10 out of the money to the downside. But that's to your point, Scott. You wanted to skew it a little bit bullish. I want to skew it to the
upside.
Right.
And then sell the 325, 330, or even 330, 335.
Yeah,
to give me a little more extra room on the upside. Let's see what the 330, 335 comes out.
Let me go in and change these now.
You can change that to 330, and then buying the 335 on the call. So $5 wide on each vertical.
Bam. That's what I want.
And you're collecting more than half the width of that iron condor.
The key is, if you're looking at what Scott did here, and we'll take off the other one, is that he has taken this. Let's see. We'll hide all our positions.
I think you've got one more in there that you need to delete, Kevin.
My break even on this is going to be about 282 up to 333.
Yep.
So definitely skewed to the upside. I'll take my chances.
Yeah, and then you're giving yourself that one standard deviation move a little bit outside of that to the upside, which is skewing it a little bit more. But you're collecting a lot of credit on that iron condor. You could, if you're more comfortable widening out those strikes a little bit, you're going to collect a little bit more credit, but you get better probabilities of success on that type of neutral type strategy that's skewed a little bit to the upside. Now, Kevin's going to go ahead and put that in once or twice, and we'll go ahead and take a look at that tomorrow, do a little trade management. But let's get to Microsoft, because they've got earnings also after the close tonight. And this stock has severely outperformed the overall market, guys. Shares are up 22% since the start of 2018. So didn't see any downturn last year like most stocks did, Kevin.
Yeah, I mean, like I said, all you got to do is look at the chart on Microsoft. It's held in there pretty well. Like I said, everything sold off in mid-December. Microsoft has come back. It looks a lot like a lot of other stocks in the S&P 500.
They've become a growth company again, Scott, after just being a legacy tech company.
Yeah.
What are you looking at here in Microsoft? Stock's up nearly $2.40 today.
I mean, that's all off of Apple and just the rosy nature of what's going on out there. But, you know, it's about their cloud business. They're killing it, absolutely killing it. And I know I'm going to sound like the absolute uber bull here. It's kind of, to me, it's hard not to take an upside play here. I would play this one maybe a little bit more conservatively and do something like a call calendar, keep things a little bit closer to the vest. You have an expected move. Let's see. Stock
$4 and change.
All right, so maybe look at the 110 call calendar.
And
it's like you're in my head.
Now, here's the thing. Do you want to do a 1 week wide or a 2 week wide? So it's based on your
33 cents for a 1 weeker.
If you're doing this for an earnings play to take advantage of a move higher, collapse in volatility in that short strike of the February 1 weekly, you're only doing 1 week wide typically, right?
Correct.
Because duration matters, because sometimes you can do a calendar 2 weeks wide, a month wide, 3 months wide. Just depends on your duration and your view over that duration. But for an earnings type play, you want to do a shorter term one. So Kevin's got that in right now. And let's go ahead and take a look at the Analyze tab on that particular trade, Kevin, just so we can give our viewers an idea of what that is going to look like as far as the call calendar. It's at the 110 strike, so you're getting close to those all-time highs that we've seen in this particular name. So Kevin's going to show all, and there you go, right there. Now,
pretty simple, pretty fundamental position there.
Now, that being said, that is the complete, risk on that particular trade is what you pay for it, right? So your wings, your range here on this trade shows about a 104 to about a 115 range for this, but we all know that's going to be probably a little bit tighter because
the vol's going to collapse.
The vol's going to collapse in our long option also, which I think is key for viewers and
well, your long 12 Vega. That's what you have to be cognizant of.
Right. Yeah. So you're going to get that vol crush in the one that you want, which you're short in, but you're also going to see it in a long February 8th weeklies that expire in 9 days. But we'll go ahead and put those two in. Take a look at those trades tomorrow, and we'll do some trade management. I'd like to thank Scott Bauer, CEO of Prosper Trading Academy, for joining us. This was like a whirlwind day, but it should be, right? It's earnings season.
Got to take advantage of it.
Yeah.
Don't forget Facebook out there, everyone, with earnings after the bell today as well.
Right. All right, guys. That does it for today's show. Thanks to Kevin Hincks also for joining me today. Join us tomorrow, 10 a.m. Central Time, right here on the TD Ameritrade Network. Have a great trading day, everybody, and stay warm.